Now it's on, right? Okay, great. Good morning. Where are the energy levels so low? What, is it bad breakfast? Okay, my name is Ronald Azairwe. I'm one of the founders and currently the managing director of Pegasus Technologies. And I'm honored to give a keynote address. Again, I have about 11 slides in 10 minutes. That's about 0.9 minutes for every slide. So let's do this. I don't know if I need glasses. I'm growing old, I think. Much better. Okay, so let's start off with a few interesting stats. And by the way, these stats were taken from, credit goes to FSDU. I think this paper was done in 2017. And it throws up some very interesting stats that we might want to look at before we look at the evolution of fintechs. In Uganda, they were saying there were currently 70 fintechs. That's at 2017. I don't know if that number's gone up or come down. We'll look at that. And about 35% have been in operation in the last 2 years, so since 2015, and you can see the growth that's happened there. Payments, the largest area of fintechs in Uganda, and fintechs were contributing a volume of about 17.6 trillion. Just to put that figure into context, how much does Euro collect in a single year compared to that? I think it's about even. That's about how much taxes the government collects in a single year. The next largest fintechs in Uganda are the banking infrastructure, investment savings, and so on and so forth. About 60% of the fintechs that currently operate in Uganda are native. I think that's a very good thing. About 60% of the fintechs are native to Uganda. 21% are more generally focused in sub-Saharan Africa, while the rest are global fintechs. So we have only about 19% that are foreign, out of Africa, for that matter. Now, that slide was about Uganda. This slide is about Africa in general. There are over 300 fintechs in Africa. Now, if Uganda contributes about 70 of those, I think that's a decent conversion. We are looking at almost 40% of the total number of fintechs. So I think that's a very decent conversion. More than half the fintechs, again, are startups less than 2 years old. That's a bit of a frightening statistic, but I'll tell you also why it's a very exciting one. So again, Nigeria, South Africa, and Kenya, of course, they lead. Over 40% of fintechs in Africa focus on solutions in the payments and remittances space. And this is not by chance, this is by design. And again, we'll see why it's by design, but largely most of them do payments and remittances. As of December 2017, venture capitalists funded over 150 deals and invested over 100 million shillings in fintechs in Africa. I don't know how much of that money came into Uganda, the $100 million. But let's move on. So, quickly, the evolution of fintechs is tied to the evolution of banking as an industry. Again, largely because the word fintech, again, speaks about financial technology. So it's really technology that enhances financial activities. And traditionally, financial activities were tied to banks. Either banks, again, banks being the medium through which economies operated, whether it's putting cash into the economy or pulling cash out of the economy, and so on and so forth. So the evolution of fintechs really is tied to the evolution of banking. And if you look at the slides I have up there, traditional banking was typically about deposits and withdrawals, and to a small extent, and I'm addressing myself purely to Ugandan cases, they were also a bit down to remittances. If you wanted money sent from abroad, whatever, then the banks did that for you. So those were the three largest products that banks did. Of course, plus or minus a couple of others like loans and savings and so on. But really it was about deposits, withdrawals, and international remittances. In the mid-2000s, the banks began to morph. They began to realize, and the team here was alluding to it, that the banks need to stay relevant. So in 2000, they moved a bit into things like electronic transfers. Okay, that was an addition. Card services, yes, but by 2000, I remember I was in my first job at Standard Chartered Bank, and they had a small section called a card center where they had this preloaded card that you loaded but were only able to use at a couple of locations, I think hotels and fuel stations. So about 2000, card services began to come. And of course, ATM cards were already in existence. But we're talking about cards that are not just ATM cards. With the advent of mobile money in 2009, we saw a big shift in the way banking was done. Whether this was to counter the movement or the move of mobile technologies, or it was purely a natural progression, is something we can debate. But about 2000, we began to have peer-to-peer transfers. We did bill payments. Banks could now do bill payments. You could walk to your branch over the counter and pay your bill. And of course, value-added services, USSD, SMS, and so on and so forth. And again, most of these I argue it was a reaction to the way mobile money had changed the landscape. The reinvention of mobile money after its growth, largely now, forced banks and the fintech industry to go beyond just peer-to-peer transfers into things like bulk payments, bill payments, collections, mobile savings and investment, and mobile healthcare. Okay, and there are many fintechs here represented, I'm sure, that are already in most of those things. What's the statistic there is a very interesting one, that right now we have about 21 million mobile money wallets. That's not users, that's mobile money wallets. To put that into perspective, all bank accounts in Uganda, including government bank accounts, including company accounts, and companies here that have over 10 accounts and so on, 20 accounts. The total number of bank accounts is about 4 million. So you have 4 million bank accounts, you have 21 million mobile money wallets. And we're not talking about wallets like Zente and other wallets like Eversend and so on. These are just mobile wallets run by mobile network operators. So I think that's a very interesting statistic for us that are in the fintech space. So there's quite a lot of potential and growth in there. Now, historically, again, this wagon wheel is by no means exhaustive, but largely this is a space that fintechs play in. We're doing e-commerce, we're doing wallets, we're doing merchant collections, we're doing school fees collections, we're doing savings, we're doing bill payments, we're doing bulk payments, we're doing agriculture value chain digitization. My friend here was speaking about that, and maybe we need to get in touch after. Agency banking, e-banking, and so on and so forth. So there's a whole host. This is really a representation of many other things that can be built on top of this wagon wheel. But largely this is the space in which the current fintech industry is playing. The pioneers, what were the challenges at the time we started? And I see a few familiar faces here. We started together, young men. 2006, 2007, I think you're Uganda is one face I recognize. I don't know if many of you here were in that space yet. But yes, so in 2006, even before the advent of mobile money, is where, with the first bill payments API, is where we trace the origin of many of the fintechs. What were our challenges at the time? There was mistrust from the establishment. Again, people did not understand what this whole thing was about. Imagine going to an organization like Umeme or National Water and telling them, shut your cash offices, let banks do the collections for you. So customers should no longer be able to come here and pay their water bill, or should no longer come here to pay their electricity bill. I was very frightful for many of those establishments, and many of them resisted it. They felt it was, breaking with tradition. So many of them mistrusted the solution. Many of them thought they would lose that interface with a customer, and it took a lot of convincing for them to understand the value of that. Of course, most of the startups, myself inclusive, when we started, we didn't have a data center. I remember the very first water collection system was running off a PC somewhere in dark away. There was no firewall, there was nothing, and that's what it was. So most of the fintechs lacked the facilities. Again, it was a very nascent industry. Not many people believed in it, and so those were some of the issues. Fintechs were all startups. We've had some of the stories about startups. No capital, no money, just good ideas and nothing whatsoever in terms of infrastructure. So all the problems associated with startups really affected us. There was poor infrastructure. 2006, those that remember well, I think were still running 2G, and that was really high-end. But we're still using GPRS and Edge and so on. Very, very poor technology. There was no national backbone right now that you people are enjoying. I think all internet was done by satellite at the time. So the under cable internet from SIMs and Teams were not here yet. So first of all, it was very, very expensive affording internet, but also it wasn't there. You had to, there were few service providers and so on. So poor infrastructure. There were not hardly any leased lines. If you got that, that was very expensive. Many of the industry players didn't have APIs, and we'll talk about things like the way Mojaloop with the open API revolutionizes the industry. But at the time, there were no APIs. So you actually had to go to the institution, help them create APIs, then come outside and consume those APIs to be able to deliver service. So it had its benefits as well, because then now you are on the inside, so it had its own benefits. There was very low penetration of mobile money. Of course, first of all, this was before the advent of mobile money, but even at the advent of mobile money, the penetration was still low. So there were very few users that could use the services that you put out there, which was very discouraging for the people we had to convince to open up for mobile money payments. There was low technology in the market. Smartphones were not here yet, or if they were very few. There was a BlackBerry and so on. Poor demand for digital services and payments. Again, traditionally people were used to cash. It was hard to tell someone you can actually collect e-value and deliver goods and services and then cash it out later. So people would say, I'd rather take cash. Those are some of the things we had to battle with at the beginning. And then, of course, the culture of face-to-face interactions, which very many people gave attendance to. But we had our own benefits. There were few and far between. Does this style work? Next slide, please. Okay, sorry. We had a few opportunities. One of the very first was that there was fallow ground. It was virgin territory. There was hardly anything. So whatever idea you dreamed up, you could just go there and make it work. So that was very important for us. There was very little competition. Again, like I said, I can name only about 5 fintechs at the time, and most of them were Kenyan fintechs that didn't really think Uganda was any market to go into. So with the exception of a couple of us, there was really nothing in the way of competition. Again, we had very little interference from banks and telecoms. When I speak about the challenges of the of the fintech now, you'll see why that was a very important factor. The now. Where are we now? What are the current opportunities? There's a number of them. So many, and I think everyone should take advantage of this. Everyone in this room should really take advantage of that. There's a lot of demand for banking services, and the proliferation of mobile technology makes it possible to grow. The growth, I do not think there's any Ugandan now above the age of 18 who doesn't have either a mobile phone or some way of accessing digital services. That's a fact. The merchant space is growing. Merchant here used in the strict sense is anyone that is selling goods or services and wants to be able to receive a payment, some sort of payment for their goods or services. And that space is growing. We have an industry that sells and buys. And so in the merchant space, there's quite a lot that still needs to be done. There's growth in e-commerce. My colleagues talked about it here. The public sector, and I'm glad I see someone from NITA, Mr. Chirenga. Public sector and the need for e-government. Everyone now, because they are tech savvy, because they are literate, because they have all of this, are beginning to demand that government services should be online. And for me, that's an opportunity for growth in this sector. There's now regulation which streamlines operations and levels the playground. Now again, this is a double-edged sword. It's good that there is regulation that's coming in. I think on March 28th, the bill from Parliament went to the President and is waiting assent for the National Payment System law to come into effect. And so that will regulate the way the industry operates. That has both its benefits and some of the some bad, not so good things. Of course, the work from home thing that my colleagues also alluded to is a very, very big benefit. I do not think for a moment that we are going back to the way things were. This is the new normal. Get used to it. And so the work from home thing is a big advantage. We might look at it, again, it's how you approach it, whether with apprehension or with anticipation. My challenge here is let's look at it with anticipation, because it's not a foreboding of bad things, but for us in the industry, it's a way to make ourselves more relevant. Of course, internet is now very cheap. It's a dime a dozen, and you have everyone coming to sell you internet, and the price wars have driven it down, so it's a good thing. The national backbone now is, every year they are adding on, it's reaching every corner of the country, so there's really a big benefit there. High literacy rates. 13 years ago when we started, which is 2007, 2006, we didn't have as many literate people as we do now. Now everyone is literate, everyone is able to consume our services. And then of course things like the open APIs, the Mojaloops, open source technology that everyone has access to. Again, these are not exhaustive, but these are some of the biggest opportunities we have as an industry to leverage. What are the challenges? And they are not few. Let me quickly run through those. Now regulation is going to make it a bit harder to start. You have to go through a whole licensing regime, and some of the items, and I was lucky to contribute to the bill, and we resisted some sections of the bill, particularly section 68, that made it a bit more harder for a young man with a laptop in a university room that has a good idea. I felt the bill was very stifling for such a person, which is how many of us began. So regulation, like I said, is a double-edged sword. It has its good things, has its bad things. I think it's also one of the bad ones. Of course, regulation stands in the way of innovation. We have erratic regulations and rules sometimes that come up that are very disruptive, and hopefully now with common voice we can be able to confront some of those. Price wars that are coming out of competition. Everyone is going into the same space. And so your price per unit, or price per, when you're pricing your products, you have to be very cognizant of what else is there in the market. So competition has brought prices down. And the problem with that is that it's a race to the bottom. The newest guy will always try and offer the cheapest price for what seems like the same product, but you know, is an inferior product and so on. And then of course bigger players trying to go it themselves. Many banks are now saying, wait, can't we start off a fintech ourselves? Telecoms are saying, can we go for direct connectivity? And so where previously the fintechs played in the space of bridging the providers, banks and telecoms, to say utility companies or other businesses, these guys are saying, can we go direct to that business and cut out what they see as the middleman, which is the space for the fintechs? Of course, it's in futility, but ultimately it's something that we need to consider. And that's the end of my presentation. Thank you very much.
Yes, thank you so much. Thank you so much, Ronald Azairwe, the MD Pegasus. You can please remind, because we're going into our second panel. You can take your seat up here. Yes, please.